Hi everyone, it's Cam Buchanan here from the International Day Trading Academy, and welcome to another edition of Trading Success podcast. So what are we going to look at today? And I think what we'll run through today is just the charts, the major charts, just to see where we're sitting after the hype of the election and the subsequent pullback, and how the market's just gearing up for maybe another step higher. We'll look into some of the charts so we can see where that truth lays. Also, we'll run quickly through some of the news that's coming up, and then that should be it. So a nice, quick, short one pre-Thanksgiving that's coming up this weekend as well. So just if you're trading this week, if you're trading the US close on Friday morning and Saturday morning, it will be closed. The markets are open for the morning session, but then the market will close on those afternoon sessions. So volume is generally pretty slow coming into those times. And we had a look through some of the last few years of what's happened in Thanksgiving, and typically the volume drops and we don't usually get a lot of radical price action. Though, we don't know, we can't predict what the future is going to hold with the markets, but we can really, we don't know for certain anyway, but we just can work on what's happened in past history, and typically coming into Thanksgiving, it's a little bit quiet. So just be careful if you are trading. You're not going to get your huge runners, so it might be good for maybe smaller type trades, trading within the range. So just be mindful of that. All right, so let's get into the news, see what we've got coming up now. So I'm just going to share my screen. So let's have a look this week. So today is Wednesday. We did get CPI came out in Australia this morning, and our inflation is down to 2.1%. So you think we would get a rate cut in December, you'd think, based on those figures. Looks like New Zealand kept their rate on hold at 4.25. We had consumer confidence in the US as well last night, early Wednesday morning. So that was as expected. And this week we've got, probably the big news we've got coming out is preliminary GDP that's coming out tonight in the US. And then we've got the core PCE coming out on Thursday morning. So basically Wednesday night tonight. So 1 o'clock. Queensland time. So that'll be on Thursday morning Queensland time, early. So if you're staying up trading the US Open. But apart from that, not a lot of news coming out. A little bit of European news. There is some Chinese manufacturing news coming out on Saturday morning as well. But that's about it for news. Let's have a look at the charts. So let's have a look at the S&P 500. S&P 500 is, so last week what we were looking at was this. This is the regular trading hours. So this is just the US cash market daily chart. So it doesn't show any of the European or the Asian data here. But what we can see is that we have that balance here. So we had basically a 4-day balance, and then the market finally broke out of that. So that day was Friday. And you can see that what the market did, it tried to fill this gap here. If the market can't fill gaps to the downside, it just generally means it's a fairly bullish sign. So we broke out of that balance last week. So longs above 5,940, around that 5,950 mark, were definitely very good trades. If you hold the breakout, or get above that level once it finally broke out, that was a very good trade opportunity. We were watching 5,900. If we saw the 5,900 break to the downside, but we just could not get under 5,900, and we could not sell off and fill the gap. So we filled the gap to the upside, and now we have double topped here. So are we going to get a reversal off the high? Who knows? Are we going to get a breakout coming into Thanksgiving? I'm not too sure. But look, volume's holding up coming into the weekend, but it did drop today in the US. So I think Thursday, Friday volumes will be a lot lower. Look for some volatility to come into the market next week, I'd say. So if you want to have the rest of the week off in terms of trading the US cash session, I totally agree that would be a good idea. The next thing we want to talk about is the NASDAQ. Now, notice that the S&P is up at all-time highs. All right, now notice that. NASDAQ, however, is struggling to get back up to the all-time highs. So if we look at this is the regular trading hours. So once again, the cash market data. Once again, had a very similar scenario. We had this imbalance zone. Market didn't quite fill that imbalance zone or that gap. Once again, so we've left a gap here on this chart, which is a bullish sign. We did close the gap to the downside here, and we broke out of that balance range. So we had that balance range up around 20,771, 72. That was the area we want to see the market break out of, and it finally did last week. Thursday, it got out above it, and Friday held above it as well. Monday, we gapped up and we came down and we closed the gap on Monday. So the market was very bullish in the European session on Monday. Let's have a look and see. The market opened here. We went all the way up to the high side and then we came back down. So this was Tuesday's trading. So Tuesday is now creating a little bit of balance in between this bar here. So we've got a 2-day balance here on this time frame, and we're still struggling to get back to the 76.4. Now we've got this liquidity zone back up to the high side. So NASDAQ is a little bit behind S&P 500, which is pretty typical coming into the back end of the real estate cycle as well. Generally, the S&P banking stocks tend to perform a little bit better in the second half of the real estate cycle. Real estate investment trusts do a little bit better. However, the tech giants are still holding their own and doing very, very well. Like your Teslas and your Microsofts and Facebooks, and those companies are also doing very, very well as well. However, the NASDAQ is not really showing much at the moment. It might break out later when this cycle really winds up. But at the moment, S&P 500 is leading the show. Now, what has been the big mover? Now, last week, obviously, the Bitcoin has been the big mover. So we finally broke out of all of those that bullish flag pattern, and we are just basically we cracked 100,000 on the futures. I don't think spot Bitcoin cracked 100,000. But the futures Bitcoin cracked 100,000, and we've sold off from there. So we're back down just above around 92,000. I think we came down to around 91.5. So we're holding kind of around about that 93, 92,000 at the moment. So obviously we're going to have some resistance up at 100,000. It is such a prime level. You can see here we've got a big Fibonacci extension level there at around that same level. So this is an obvious place for profit taking in the markets, and that's what we're seeing right now. If we update the latest range of fibs, so you can see that's the most recent swing. You can see here we're kind of down around about that 25%. So we've already retraced 25% of that big breakout swing. Let's see if we can come back down to the all-time highs. All-time highs being around the all-time highs around $80,000. So if the market does sell off over the next couple of weeks, look for 80,000 to hold as support. That'll be a typical place to look for another buying opportunity. If you haven't got into Bitcoin, that could be an opportunity to get in on that. But really good shorting opportunities at the moment. If we see some weakness, I think a trade back down to at least the 50%, back down to 85, and then down to the 61.8, around 80,000 is a very good trade. Gold. What is gold doing? Once again, gold's consolidating a little bit. We had a big sell-off after the election. Then we sold all the way back down to 2,550. We've rallied back up to around about the 66% mark of that last swing down. and now the market is trying to do a swing down here. So gold's looking a little bit consolidating at the moment, but I think definitely with wars and all those things still lurking for 2025, obviously Russia, Ukraine, still nothing really holding that back at the moment. It looks like this market's going to, the gold market will continue to the high side. So it's just having a bit of a retracement at the moment. So a good opportunity to load up if you are looking at getting to gold, I think. But once again, in terms of trading, we are in a trading range. So once again, just watch the field levels and look to see how the market behaves. You can see the market's tried to fill some of these imbalance zones on the way back up. There's a little bit of imbalance to the downside yet to fill. So I think trading gold is probably a good play at the moment. And just obviously trading between we're in a range, so obviously trading between the extremes of the range is probably going to be the best opportunity. Oil is the next one. Oil has been, as we said, I told you I did have a longer term position on oil, and I dumped that the other day, and I did go short. I made a little bit of money on the short, which was good. Made up for a small loss on the short, but this, you can see gold is looking is consolidating on these lower ranges around these liquidity zones. But I think if gold can break $66, I think we will see a push at least back down to retesting this Fibonacci expansion cluster back down to these prior lows around 63, 64. So I'm watching gold, watching oil. And I do think oil is looking a little bit weak at the moment, but it has been ranging a lot between obviously 72 and around that $67 mark seems to be the range there, about a $5 range that we're experiencing. But like I said, if we break this liquidity zone here, I think we'll see a liquidity break under 66, and then we'll probably get a pretty sharp move down to 64, maybe a break under 64 down to 63, 62, and then maybe from there we'll start to see oil rallying again. But I'm pretty bearish on oil at the moment. It hasn't really done much. And I think, guys, that's about it in terms of the major markets. I think one of the markets I was looking at, 6E. 6E has been very has sold off a lot. We've seen the dollar index strengthening back up to 107, up around 106. Consequently, we've seen the 6E sell off. So the 6E has been pretty weak as well. The Aussie dollar is also around about that 65, 64. Aussie dollar is a little bit weak as well, which is a little bit disappointing for us in Australia, particularly if you're traveling overseas. We're not getting much bang for our buck at the moment. So a little bit of a challenge there for us if you're looking at traveling. And that's the good thing about having an account in US dollars and trading the futures markets. You're making money in the US dollar, so that's always a positive thing to have your money expressed in US and trading in US. Anyway, guys, that concludes the trading podcast, trading success podcast for this week, ending the what is the week ending here? Getting my dates. I know today's the 27th, 29th of November will be the end of this week. So I think next week, starting December, we probably should see, I think, the start of the Santa rally, and I think the market should be pretty bullish as of next week. I think we'll see a continuation up to Christmas Day and maybe a slight sell-off around January. But have a great trading week for next week, guys. Take it easy this week. Maybe have a bit of a break. I know it's been a big, long, hard year. We've had some great trading opportunities coming up through November. So I think just take it easy while the market's, finishing the month off. The market's pretty quiet coming into Thanksgiving. You don't really want to get stuck in too much choppy trading. So be careful out there and always protect your risk. And also make sure, if you haven't found out about our new TradeMax indicators, the risk management tools on those TradeMax indicators are absolutely fantastic. So if you want to find out a little bit more about those TradeMax indicators, we will be doing our support webinar first Thursday of December. Come in and check it out, because we'll be doing a full review of the TradeMax indicators. Find out what you could be missing out on if you haven't been trading with us for a while. Anyway, have a great week, guys, and lovely weekend, and we'll see you very, very soon.